We're going to finish it tonight. We're going to start it tonight, but we're not going to finish it tonight. What? You knew nothing about derivatives. Derivatives are not part of the F7 syllabus in any way, shape or form. But a little bit of deferred taxes. And when deferred tax gets examined at F7, in fact, when anything gets examined at F7 these days, it's just a small little calculation. It's just a piecemeal little number. It's just a little multiple choice question. Or a little shuffling, yeah? There's very little writing and expressing yourself in F7, unless it's to do with ratio analysis. And P2 is mostly writing. I know there's a big number crunching group accounts question at question number 1, but mostly it is about articulating, discussing, evaluating, blah, 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 blah. Does anybody know why? Why we account for deferred tax? Because the standard says so.
Because there are some tax which need to be deferred.
Yeah.
Tiny
Oh, now, that's a word I don't want to hear again. So I won't tell you what she said to me, because then you'll hear it. But you mustn't do that. That's a very old language you're using there. So we don't use the word timing. We use the word temporary. All right, temporary. All right, but the answer that is the answer to a different question. The question I'm asking is why, not how. How we account for deferred tax is temporary differences. Why we account for deferred tax is a different question. Right. What is the rate of tax? What's the rate of corporation tax in Malaysia? 25. 25%. Let's take it at 25% because it's a simple number. I can do 25% in my head. Let's imagine we make a profit of 200. So we are a business, and our business makes an accounting profit of 200 million ringgit. All right? So is it possible, is this at all possible in Malaysia, that you make a profit of 200 million and there is no current tax to pay? Is it remotely possible that you can report a large accounting profit but have no current tax to pay, yes or no? Is it remotely possible, yes or no?
Yes.
It is.
Yes.
Donald Trump.
Yeah.
Yeah? Donald Trump has paid no federal US taxes for years and years and years. Why? Is he smart? I just think he's a creep. Anyway, he went bankrupt 15 years ago. So he had these enormous losses that he was carrying forward. So because he had all the loss, until he makes that amount of profit, he doesn't have to pay any tax. So it is perfectly possible to make a large accounting profit, but to have no current tax to pay. One reason is losses carried forward. Another reason might be accelerated capital allowances. Another reason might be non-taxable gains. You could have revaluation gains in your profit for which you pay no tax. So, hear me out. It is perfectly possible to report a large accounting profit, but for there to be no current tax assessed. I believe in the matching concept. I believe that if we report a profit, then we should report the tax on that profit this year as well. Just because we haven't been asked to pay tax today, we will eventually have to pay tax on that profit. So I believe in the matching concept. Why do we account for deferred tax? In order to ensure that we are matching the tax effects of events and transactions when they are reported. It's all about matching. In a shorthand way, why do we account for deferred tax? And the answer is matching. The answer is matching. It is perfectly possible to report a large accounting profit, but for no current tax to be assessed. It is perfectly possible to report a large accounting profit, but for no current tax to be assessed. The tax consequences of transactions, the tax consequences of events should be recognized. The tax consequences of transactions and events should be recognized in the same way, should be recognized in the same way, should be recognized in the same period as we account for those transactions and events. The tax consequences of events and transactions should be recognized in the same way, in the same period, as we account for those transactions and events. Only by accounting for deferred tax do we achieve this matching. Only by accounting for deferred tax, only by accounting for deferred tax do we achieve this matching. It is perfectly possible to report a large accounting profit, but for no current tax to be assessed. The tax consequences of transactions and events should be recognized in the same way and in the same period as we account for those transactions and events. Only by accounting for deferred tax do we achieve this matching. So why do we account for deferred tax? Look out for it when we do the numbers tomorrow, but there will be matching. So that is why we account for deferred tax. How?